Hello, my name is Will McCreary. I'm a crypto enthusiast. If you're listening today, you're probably familiar with my videos, the hedge fund, all we're doing with my gold mine and everything. But today I wanted to kind of go back to the fundamentals of what is cryptocurrency, what is Bitcoin, and what is blockchain in general. We'll talk about some economics, and then we'll talk about some features of the fund. So stay tuned. We'll try to make this a 10 to 12 minute video, but it should be very helpful to you because these are hard concepts to grasp, let alone explain. So let's dive on into it. A blockchain is a chain of blocks that hold data. These blocks are essentially time-stamped digital documents. No one can tamper with them. They're 100% immutable. You could think of a blockchain as basically a digital notary. The concept of blockchain was invented or discovered in the 1990s, but it really wasn't used until 2009 when a white paper was published for Bitcoin by Satoshi Nakamoto. We're still not sure if that was one developer or a pseudonym name for a group of developers, but that's kind of the origins of blockchain. That white paper in 2009 really kicked off this whole world of blockchain. For example, if Brian wants to purchase Will's truck, which is valued at $30,000 worth of Bitcoin, the contract is written, conversations made, Brian issues his contract over the Bitcoin ledger. Will accepts the payment, and within a couple hours, Bitcoin will leave Brian's digital wallet and settle in Will's digital account. The contract is unmonitored by a centralized agency or nation state. Once settled, it's settled. I would really like to highlight one of my favorite aspects of Bitcoin, which is triple entry accounting, and we'll get into it in a second. But in my opinion, the world has been stuck for a very, very long time, perhaps hundreds and hundreds of years, in double entry accounting. Let me explain. Double entry accounting takes place when a bank enters a credit and a debit onto their paper ledger. But there are many weaknesses, in my opinion, of double entry accounting. Let me explain. The first one is the ledger can be destroyed, rewritten, tampered with, etc. 2, the currency issued into double entry accounting has traditionally been currency that could be inflated, meaning that the supply can be manipulated by a centralized agency. So Bitcoin truly birthed true triple entry accounting. Here's how it works. You have a credit and a debit, just like double entry accounting, but the quantum ledger, or computers from all around the world, come together and in real time are unemotionally, right, justifying those transactions. So you don't have a ledger or a bank teller or who have you justifying the debits and credits. It's essentially justified by quantum realm of the internet in real time, immutably, and it won't break protocol. 1 + 1 = 2 every single time. No one can fudge with it. So those are the basics of a blockchain. I just don't want to bore you with the details, but you have to understand some of those fundamental concepts. So you might ask me, so Will, why would I get involved and consider investing in cryptocurrency? Well, let's examine a few things. Bitcoin, blockchain, is a deflationary vehicle or asset. Blockchain is decentralized and secure. Blockchain provides perfectly transparent transactions and triple entry accounting, which we just went through all that. Blockchain has finally started its adoption phase, in my opinion, with governments, nation states, and countries around the world, starting probably with the Bitcoin reserve that just went through Congress. Blockchains are proving to be exceptional investment vehicles. Since its inception, Bitcoin has grown by 43% every single year since 2009. Yes, we're running into the law of diminishing returns, but what other asset class continually makes that kind of a gain over the inception of its lifetime? That is unheard of, especially with the S&P landing at about 9.2% annually. Bitcoin is, on average year, beating that by about 400%, which is incredible. So why should you invest in crypto? Well, we're still very, very early in my opinion. According to the Bureau of Labor Statistics, only 7% of Americans are involved in this asset class. So it's not widespread. People aren't jumping in, but that's starting to change about now, in my opinion. We're also starting to see the world's elites, gentlemen such as Warren Buffett or Larry Fink, CEO of BlackRock, they were feeding us this narrative for a long time that, and I quote, Bitcoin is rat poison. criminals deal in cryptocurrency. But they've completely flipped the script, and now they're saying Bitcoin is a hedge against inflation. Bitcoin is a safe investment. In my opinion, they may be fudding people out because we can go back through a transparent Bitcoin ledger and see that they've been buying this for years. So they're starting to flip the script, and when the elites flip the script, that's when the public usually rush in and start gobbling up the asset. These videos get long, so I'm rushing through some of this, so I hope you're still with me. But I also want to compare Bitcoin to the S&P 500, to the dollar. We're going to look at the value, and from an investment standpoint, what would it look like if you began investing with $100 in 2015? What would that 100 turn into today in 2025? If you look at my chart, you'll see the years there on the left. Bitcoin, you can see $100 in 2015. Same thing for the S&P 500 and the dollar. Let's see where things go. Okay, $100 in Bitcoin, then at $314 a coin. So again, Bitcoin is fractionalized. You can buy pieces of it. So that would have bought you roughly about a third, a little less than a third of a Bitcoin at that time. That $100 today's value would be $35,000, which is incredible. And this happened as Bitcoin just a few days ago hit a valuation of $112,000 per coin. So it has grown dramatically. In the last few years, it has grown 35,000%, which is insane. And people still hold on to this narrative that crypto is volatile, which it is. We'll talk about that in a second. But I don't care if something's volatile. If it's still going up, it makes no sense not to invest in an asset class that is gaining value like that. That's absolutely crazy. Let's look at the S&P real quickly. If you invested $100 in 2015, today you would be able to pull out $235 with inflation. So your purchasing power would be even less than that. US dollar was $100 in 2015. Basically, because of inflation, is worth $75 here in 2025. So we have the dollar on a downward trajectory, Bitcoin skyrocketing, and then the S&P, stocks, Dow Jones, creeping up at, what is that, about 300, just over 200%, 230%. So there you have it. Those are our comparisons. So from a financial standpoint, you should have invested in Bitcoin 10 years ago, but there's still a lot of opportunity in this industry. I think the next 20 years are going to be mind-blowing, though we are running into the law of diminishing returns. In the next 10 years, Bitcoin is not, knock on wood, I'm not a financial advisor, but I can almost guarantee that it is not going to appreciate another 35,000%. I would love that, but it's very unlikely. But it is still on a trajectory of growth, which is going to blow the dollar and the stock market out of the water, in my opinion. Let's quickly talk about My Gold Mine. It is a privately managed fund that I started with a couple co-founders, some brilliant men and women working alongside me, with accounting team, legal team. It's just been an amazing journey. In starting this fund, I set out to solve the two biggest complaints in the cryptocurrency industry. So folks who know about it but don't jump in, and that is volatility, which we talked about a little bit, and then ease of entry. Again, it's officially a privately managed fund. We have a prospectus, we have user agreements, we have almost 100 pages of verbiage, of legal documentation that you have to sign off of to be involved in this fund. But it is amazing. The investors that are in it have nothing but good things to say. We're beating 401ks by about 400% a month. But let me address the volatility. I went back last year to coding school, learned Python and AI. Mixing AI and Python, I was able to develop a bot which micro trades cryptocurrency in real time. Our fund has about 400 transactions a day. Basically, this is not exactly how it works, but in terms of understanding, if the price drops 2%, we buy. If it rises 4% against that, we sell. So we have all these micro trades going on to the tune of 400 trades per day. Now, this is utilizing, instead of having a spot trade, it's where you buy, let's say you bought $100,000 worth of Bitcoin at 100, so you have one Bitcoin at $100,000. If it drops 20%, it drops 20% and you're left with $80,000. But if you have a vehicle, such as this algorithm that we've developed and employed, when the price dropped from about $100,000 to 80 2 months ago, we made 12%, because on the way down, we were micro trading. It's not a straight shot with any of these blockchain asset classes, right? It's dropping 20%, but in the middle of it, there's a lot of volatility. When everyone else lost 20%, we gained 12%. It was unheard of, but it's because of those micro trades. And that's the world that for sustainability and for gaining extra value, that's the world that I'm really interested in. So this AI Python bot has been absolutely incredible. In March, we earned 57% APY, April 32% APY, and May, which is our numbers just came in at 34% APY. So I think we're averaging 42 to 44% APY every month right now. Everyone's been thrilled. It's been such a blessing. And then ease of entry. We have it set up, a piece of technology where you swipe your credit card. You pay me dollars, we do the conversion, we pay the fees. It's very easy for you to get involved, to get some of your money working for you. Night and day, that's another aspect of crypto that I like. We're trading 24/7, 7 days a week, not 5 days a week, 9 to 5 Eastern Standard Time, like traditional stocks and bonds. So there's so many advantages to what we're doing here. Returns have been absolutely incredible. I'm trying to get people to come around on deflationary asset, what Bitcoin is. If you have inflation, that means that a centralized agency can add to your supply. The game board always changes. With Bitcoin, there's going to be 21 million Bitcoins. That's in the protocol, it's written, it cannot change. The internet, the quantum realm, will not let that number change, which is a benefit to you and I, to not have that game board flipped every time we need to print more money, right? Pay off debt. That won't change in Bitcoin, and that's what people see, and that's why the price is appreciating so much as its value keeps being explored by the world. So it's very exciting. Check us out at mygoldmine.io. We hope to work with you. We're working with 2 family offices right now, a large fund, several smaller investors. We just want to get the word out and bless you with the opportunity to potentially make astronomical returns. Your spot value comes into our account. We use it as trading liquidity. Your account the liquidity that you put into the fund can appreciate on its own. And then we're adding 44% APY so far to date on top of your spot account gains. It's been a blessing to many. Please fill out a form on our website. We'd love to chat with you, to vet you, to see if this might be a good fit for yourself, your family, your fund, your company. We just want to be here and be of service if we can. So thanks for listening to this presentation. I hope it brought you some clarity on what Bitcoin is, cryptocurrency is, blockchain technology in general, and I hope to see you on the inside. God bless.